Kotak Bank, consistent and exceptional performance, but RBI has strong reservations on the bank's IT systems. Market capitalization of over rupees 3,20,000 crores among the private sector banks ranks number 4. Kotak's profits sizable and growing year after year, helping movement of its net worth in an ascending channel, strong profitability every year, year after year. Rising advances, more particularly during the last 3 years, prudent policy of provisioning resulting in realistic GNP percentage lowest in years. Provisioning coverage has remained comprehensive, bringing NNP percentage to its lowest. In terms of asset strength, Kotak has got an impressive portfolio. Kotak's income stream, comprehensive and broad-based, supported by growing net interest income and fee-based income. Profits rising year after year, peaking during the current year, rightly reflected in the rising PAT percentage. At its best during the last 2 years, company's income reflects controlled and efficient operations. In terms of deposits, term deposits have really helped the company, almost doubling during the last 2 years. But the story is that of disappointment when it comes to current and savings account, where the increase has been very marginal. The resulting effect is CASA percentage has just fallen by almost 15%, increasing the cost of interest and thereby affecting the profitability. RBI and Kotak have had a hot and cold relationship right from 2014 on promoter holding dilution. In 2018, RBI directed promoter holding to be reduced to 15% and Kotak took RBI to court. And in all this period, share price was just moving up. And RBI settled for 26% in January 2020. Surprisingly, subsequent to settlement, the share price has moved within a range, particularly after October 2021. It has not crossed the level of 2000. That is quite surprising. Kotak has a unique success story in its 811 mobile banking. Making use of the video KYC and the digital operations, Kotak has been successful in attracting a new generation of digital savvy customers, accumulating sizable amount of business. And in the process, it has grown its credit cards and unsecured loans far better than its peers, and that is quite impressive. The roaring success of 811 digital banking was not ably supported by the IT systems, which were found to be wanting, and as a result, there were significant outages. RBI observed that the corrective action plans of Kotak were half-hearted or inadequate. That is where it stepped in with stern measures. Enters RBI April 25th and acts tough. Bars Kotak from accepting any more new customers through online and mobile banking. It mandates that any review shall be only after comprehensive external audit of system compliance, and in a similar situation, HDFC Bank had taken about 15 months end to end. Looks like Kotak has to stay without its new digital additions for a similar period, and that will be quite substantial in financial impact on the bank. RBI's ban had a disastrous impact on the share price, causing it to have a single day fall of almost 13%. Added to this was the damage caused by the resignation of Joint Managing Director, taking the share price to the 52-week low. The impact of all this is going to be quite hurtful on business growth and also on the profitability and blended yield. It is likely that FY25 will be further burdened with the huge technology costs in upgrading the system and bringing it to the level acceptable to RBI. On a 5-year basis, Kotak returned just 11% as compared to its peers HDFC, Axis, ICICI Bank, along with Bank Nifty, which returned multifold, and Kotak's 11% in the background of its strong profitability and growing net worth is quite perplexing, and one has to look for reasons why the appreciation is missing in Kotak. Quality loan book, strong profitability and growing business is not supported by price to book value ratio, which has been falling year after year, reaching the lowest during the current year. While the risk reward ratio looks favorable at this point in time, what is intriguing is what is that the market knows better than what is available to the investor, which prompts it to constantly derate Kotak share price, a question not having an answer on a plain reading of Kotak's financial statements. Exceptionally good operational parameters, strong growth, and the investment interest shown by mutual funds of late in the Kotak Bank are the positives. Continuous discounting of price to book value and the timing of contribution under electoral bonds are major negatives for Kotak. Hope you found this video on Kotak Bank to your satisfaction. I am Vitthal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card, Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.